Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Wednesday, March the 3rd. The year is 2021. Let's talk trading. Your last trade. Just remember, these videos are for educational purposes only, and your results may differ from mine. I would like to hear all about your last trade. So, if you could, in the comments, tell me about your last trade. Now, I also want you to put down, what is the most important question to ask about your last trade? Now, after you've done that, I want you to think back over some of the videos of mine that you've watched. And what's the one thing that I stress a lot and Walmall stresses a lot? We usually talk about trading plan. Did you follow your plan? You see, I had mentioned, I think it was in yesterday's video, in the tactical trading, risk and money management was resulting. So if you talk about your last trade, you go, yeah, I made this many pips, and you think that's the most important thing, I would disagree. What's more important is that your last trade, that you followed each and every step of your trading plan. You entered properly, you exited properly. If it was a loss, you took it in stride, and if it was a win, you took it when you were supposed to. So, as you're trading, keep that in mind, because if you think back to your last trade, there may be one area that you could improve on. Could be your entry, could be your exit, could be you really need to follow your trading plan as opposed to just airballing trades, trading seat of your pants, inventing trades. It was funny because this morning, Walmall and I, we were looking at this new method we've been working on, and he was telling me about something. I said, Walmall, you're inventing trades. That's not the trade. But, it's so easy to look at the chart and say, well, if I would have entered here, I could have made this many pips. But what gets you is that when you do that, you don't really have statistics backing you up. Unless you've done your homework and either journaled these types of trades, that particular type of trade, so you have some kind of reference that says, yeah, you know what, it really does make sense to enter the trade based on this criteria, based on, the empirical evidence. Most traders don't do that. And the other thing is I was talking to Walmart, I said, we just have to admit it. We're trading junkies. We can't just sit there, say for an hour. Can you sit there for a solid hour and wait for the best opportunity that hour provides? That it really fits your trading plan? Or are you going to see something that looks kind of good? Or you think, hey, it's going to bounce here, it's going to break through there? I mean, you could you could have, a dozen ways to enter a trade. It could be off a horizontal line, couple squigglies cross, order blocks, you name it. But is that your trade? Is that the trade that your trading plan dictates that you take, that you enter? And it's a hard look. When you look at the number of trades you've taken and you see most of them don't follow your trading plan. So, as you're answering the question in the comments, maybe look over, say, maybe your last 10 trades and be honest. How many of those trades did you actually follow your trading plan? Versus how many of those trades you just kind of traded by the seat of your pants? And how many of those trades did you have your risk management in place? I mean, and how many of those trades did any of these happen to you during any of those trades? And did you execute, your money management during those trades? So, like, let's say, just look over your last 10 trades and just be honest. I think you're amongst friends here. Okay, looking at the monthly chart, you can see we're 38 pips above the monthly open, and we're in the wick zone of the previous month. We drop down to the weekly, 37 pips right now, because the weekly and the monthly open are the one and the same so far. And we still have some gaps to be filled here. And you can see that the weekly broke through the previous week's low and then has come back up. And today we poked through the opening range of the week and we've pulled back. In fact, Walmall and I are kicking ourselves so hard. I'll tell you about that in a few minutes. Okay, for the year, 321 pips above the open here. Okay, we had an inside bar 2 days ago. You can see we broke out the bottom and then we broke out the top just by a pip or so today. What we have a high of 140.05, so it was 98, so that was about 7 pip breakout. Oh, we've got a more inside range action today. Oh, I'm sorry, inside bar action, not inside range. But actually, inside bar is action is inside that bar's range. So far today on the daily, only 3 pairs over 100. The pound clocking in 85 pips. Once again, you can see here it broke out of the previous day's high. Looks like by about 29, 30 pips. Nice trade, nice horizontal line trade there. You can see price tried to break through the previous day's open but failed, bounced right off of that line. Okay, but it did take out the pivot point a couple of hours ago. So pivot point fade traders, there was your entry. Probably if you took this one, you got might have gotten your fingers burned just a tad there. The green rats got paid off, and this is where Walmart and I are kicking ourselves. Oh, we were in that trade at 40. We both punched out way too soon, and it ran up to, what was it, 90 or 88. It's just that's just the way things happen sometimes. Because in fact, I was punching in and out of trades for a couple times, and then I think it was either the third or fourth times when it took off. I should have known. It's like, hey, if it's not going lower, it's not going lower, it's not going lower, it's going higher. Now let's take a look here. We took out the monthly pivot, the weekly pivot 1.40179. We came close, but no cigar today. Once again, we took out the daily pivot, weekly pivot. We haven't quite taken it out. And the monthly pivot we've taken out. The wick zone, you can see in and out of the upper wick zone, touched inside that lower wick zone by a hair, only to rock it right back up. So that's why it's kind of important to know what these levels are and know when price is near those levels. Now, as I mentioned before, I was trading here, taking some long trades here, and I let the tiger go, and it just shot straight up. So I left a bunch of pips on that table. And you can see here in the daily range, we're only at the 24 percentile. Yesterday we hit the 58. But the way things are going, and at this time of day, it doesn't look like we're going to add to the range. Anything could happen, but that's what it's appearing to be right now. And for your scalpers, you can see here the M1 range is like 2 and 3 pips per bar. So you might have to wait a couple of bars to actually exit your trade. Wall mall traders, it looks like it paid off to the south this hour, not so much to the north. This is the hourly chart, and you can see here price really isn't near anything that I'm looking at. I've got a pretty tight threshold. I think the default's usually about 5. Let's see if that shows anything. Nope. Let's see. Is it within 10 pips of anything? Nope. Nothing that we're looking at. Okay, let's see here. How many? Oh, we're only doing 1 bar. Let's do 2 bars, not 12. Oh, I know why. Let's reset this. And let's look at the current bar and the previous bar. So you can see here we're near the H4 pivot point, 1.5 pips away. And I don't know, I might put plus or minus. This might help some people. I just want to know if it's near, because then I'll go to the chart and look, and I can see with my eyes, is it above or below it? But as you can see, if price is going up and this number is going down, it must be below it. So some things are kind of obvious, but some people need a lot more help. And as you can see there, this price is going up. It's getting near those ranges and it's popping off. Or I'm not ranges, but levels, and it's popping off there. And here we go. We're looking at the order blocks, and once again, you know, looking back here at that 40 level, you can see there was a bullish order block, and then price just took off. Might be kind of hard to see that yellow. I might need to change that color, but I'm not really interested at the levels. I can see it here and see when price is in it or leaving it. And here, this is something that I've been working on, but you can see right here, this potential order block, price was down in this area, and it's come up. And you can see the potential bear block way up there. And if you scrunch the chart, you can see the price action. Price created that potential order block, which actually was an order block, came back, touched it, and then went down. So, fellow traders, you know, as I was mentioning, you really have to say what your trade is and make sure you trade your trade. And yeah, there's a lot of different opportunities on the chart that you can see, but that's not your trade. You know, until you do the homework, put in that, you know, the study, run the statistics, the frequency distributions, whatever you need to do, and then formulate a trading plan around what you see. Because that's the difference, or could be the difference between, you know, winning overall and losing overall. Because on any one particular trade, you know, you can just click the mouse and you could have a winning trade. I mean, I could buy or sell right here. Price could move in my direction. You know, I just entered that trade just based on nothing, a coin flip, you know. But that's not the way to trade to make profits on a regular, recurring, consistent basis. So, fellow traders, you know what's coming next. It's not what you trade, it's how you trade it. So, go out there and drain the banks. This is the TheRumpledOne, over and out. Now, I expect you to make those comments. So, don't let me down.